Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Urban Edge Properties Annual Report. Urban Edge Properties is a leading real estate investment trust that specializes in owning, managing, and developing retail real estate in urban communities along the East Coast. The company's portfolio consists of 73 properties, spanning over 17.2 million square feet of gross leasable area. The company provides a range of services including property acquisition, development, redevelopment, and management. This comprehensive approach enables Urban Edge to create vibrant and thriving retail environments that cater to the needs of urban communities. By owning and managing these properties, the company is able to generate revenue through rental income, making it a significant player in the real estate industry. Urban Edge's focus on urban communities along the Washington, D.C. to Boston corridor allows it to tap into the growing demand for retail space in densely populated areas. The company's expertise in developing and redeveloping properties enables it to create unique and attractive retail environments that drive foot traffic and boost local economies. The list of businesses and services provided by Urban Edge Properties includes property acquisition, development, redevelopment, management, ownership of 73 properties, generation of rental income through leasing. Overall, Urban Edge Properties is a prominent player in the real estate industry, with a strong focus on creating vibrant retail environments that cater to the needs of urban communities. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause an Urban Edge Properties stock price to make no significant changes in the past year. The stability of Urban Edge Properties' stock price over the past year may be attributed to several factors. One possible reason is that the company's financial performance has been consistent and predictable, providing investors with confidence in its ability to generate steady returns. This consistency can lead to a stable stock price, as investors are less likely to make drastic changes to their portfolios. Another factor contributing to the stability of Urban Edge Properties' stock price may be the overall market conditions. If the broader market is experiencing a period of calm, with minimal volatility and no significant economic shocks, it is likely that individual stocks will also remain stable. This can create a sense of complacency among investors, leading them to hold onto their existing positions rather than making changes. Additionally, Urban Edge Properties' business model may be less susceptible to external disruptions or trends that could impact its stock price. As a real estate investment trust, REIT, the company's primary focus is on generating rental income from its properties, which can provide a relatively stable source of revenue. This stability can help to insulate the company's stock price from fluctuations in the broader market. Overall, the combination of consistent financial performance, stable market conditions, and a resilient business model may have contributed to Urban Edge Properties' stable stock price over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a company's financial performance can be attributed to several key factors. On the positive side, new leases and renewals, acquisitions of new properties, completed development projects, increase in property rentals and tenant reimbursements, and same-property NOI increases contribute significantly to revenue growth. On the other hand, revenue decline is primarily driven by tenant vacancies and non-payment of rent, lease expirations, bankruptcy or insolvency of tenants, economic conditions in specific regions, closure of anchor or major tenants, rental revenue deemed uncollectible, decrease in non-cash revenues, and decrease in lease termination and other income. Interestingly, some factors have a neutral impact on revenue growth. For instance, occupancy rates remain relatively stable at 96.7% in 2025 and 96.8% in 2024, while rental revenue has shown a slight increase from 2023 to 2025. However, other income decreased significantly from 2023 to 2024, indicating that some factors may have a stabilizing effect on revenue growth. Net income experienced fluctuations between 2023 and 2025. Initially, it increased by 29% from 2024 to 2025, indicating growth. However, a closer look reveals that net income actually decreased by 62% when comparing the period from 2023 to 2025. Furthermore, there was a decrease of $22,068 in net income from 2024 to 2025. Profit margins showed improvement during this time frame. The net income margin increased from 31.7% in 2024 to 34.6% in 2025, indicating an increase in profitability. Additionally, the same property NOI margin rose from 96.2% in 2024 to 100.3% in 2025, suggesting enhanced operational efficiency. The effective tax rate also decreased from 3.06% in 2024 to 2.6% in 2025, contributing to higher profit margins. The company's financial performance indicates a significant milestone. One of the key indicators of a company's health is its ability to generate positive operating cash flow. This means that the company is able to produce more cash from its operations than it spends on various activities such as paying salaries, purchasing raw materials, and investing in new projects. According to the financial statements, the company has consistently demonstrated this capability. The data shows a steady increase in operating cash flow over the years, indicating a strong underlying business model that is capable of generating sufficient cash to meet its obligations. This is a positive sign for investors and stakeholders, as it suggests that the company is well positioned to continue growing and expanding its operations. The confirmation of this trend can be found on pages 38, 39, 49, 56, 58, 65, and 69 of the financial statements. These pages provide a detailed breakdown of the company's cash flow statement, which clearly shows that operating cash flow is consistently positive. This reinforces the conclusion that the company is indeed generating positive operating cash flow, which is a crucial indicator of its overall financial health. The company's debt level and interest expenses have remained relatively stable over the past few years. While there were some fluctuations in interest expense due to mortgage debt forgiveness and new financings, these changes were offset by decreases in other periods. For instance, interest expenses decreased by $4.9 million on page 31, and again from 2023 to 2025. Additionally, the fixed-rate debt balance increased by only $86,473 on page 41. Overall, the report suggests that there has been no significant change in the company's debt level or interest expenses. Management is outlining a comprehensive strategy for the company's growth and success. The primary focus is on generating industry-leading growth while improving communities through proactive management and redevelopment. This will be achieved through value maximization, which involves repurposing retail real estate, leasing, and asset management to increase rental rates and occupancy. The company plans to develop and redevelop its assets to their highest and best use, generating attractive returns. To support this growth, the company will maintain capital discipline and keep its balance sheet flexible. Sustainability is also a key priority, with efforts focused on reducing energy consumption, greenhouse gas emissions, and water usage. Risk management is another critical aspect of the strategy, with measures in place to identify and mitigate potential risks associated with real estate investments. The company intends to invest in target markets through selective acquisitions that meet risk-adjusted return requirements. In terms of financial management, the company plans to distribute 100% of REIT taxable income to shareholders and prioritize cost control. Cash flow management is also a key focus area, with sufficient cash flows expected from current operations, cash on hand, and other sources to finance operations and fund obligations in both the short term and long term. Overall, management strategy is centered around driving growth while prioritizing sustainability, risk management, and financial discipline. The company has made several significant acquisitions and divestitures over the past few years. In terms of acquisitions, the company purchased Brighton Mills in Allston, MA for $39,158,000 in October 2025. Another notable acquisition was the village at Wauchapel in Gambrills, MD, which cost $128,230,000 and was acquired on October 29, 2024. The company also acquired Ledgewood Commons in Roxbury Township, NJ for $83,211,000 in April 2024, as well as Heritage Square in Watchung, NJ for $33,838,000 in February 2024. In addition to these purchases, the company holds a 5% interest in a property in Walnut Creek, CA, and a 17.5% interest in a property in Massapequa, NY. On the other hand, the company has also made some divestitures. One notable example is a property that was disposed of in 2019, although no specific details are provided. Additionally, the company foreclosed on a property on June 27, 2024, but again, no further information is available. The company has a history of paying dividends to its shareholders. As per various pages in the report, the company has consistently paid dividends since 2023, with a quarterly dividend of $0.19 per common share and op unit for each quarter in 2025. The dividend payout was also consistent in 2024 at $0.68 per common share. In addition to paying dividends, the company has also bought back shares. Although it is not explicitly mentioned that shares were repurchased in 2025 or 2024, the report implies that distributing amounts that would otherwise be invested in future acquisitions could be an alternative to borrowing funds or making taxable distributions. This suggests that the company may have considered buying back shares as a viable option. Overall, the company's financial strategy involves both paying dividends and potentially buying back shares, depending on its financial situation and priorities. That concludes the financial summary for Urban Edge Properties. Feel free to comment below, and I will be happy to answer them when possible.